All right, so due to popular demand, I needed to record another video on LTI requirements. This is a new proposed regulation from OSFI, which has recently been announced in order to potentially restrict borrowers' capability to borrow more than 4.5 times their annual income. And to get right into it today, I'm going to explain to you some of the fine print about what OSFI has told us specifically about how this rule is actually going to impact potential borrowers and clarifying some questions. So we're going to get exactly into how this rule is proposed to work. Keep in mind, there is information that has not been provided, and we still don't know the ramifications of this long-term solution or recommendation for lending guidelines, and we'll continue to provide information as it comes. So stay tuned, check it out, we'll see what you think. All right, you know the drill. Click that like button, hit that subscribe button if you're liking this. All right, so imagine that federally regulated mortgages are a club. OSFI is basically the bouncer, and they've just changed the rules and restrictions on who they're letting in and out of the club. And the people trying to get in are you seeking a mortgage, and this is obviously big news. So just a few weeks ago, OSFI actually announced that they were going to be changing the rules and regulations on borrowing capability to using an LTI requirement, which right now is a debt service ratio. Check out the previous video where we talked all about that. For today, LTI is a different way to qualify someone's income. Instead of looking at your monthly payment relative to your overall gross income, instead what they'll do is they're recommending that they use the amount of money that you earn and a multiplier of that. So for example, if you earned $100,000, they're saying essentially that, okay, well, you can only qualify for 4.5 times of that 100,000, which means that you could max out your borrowing capability at $450,000. It's a big change and could have huge impacts on what people can qualify for. So let's talk about some of the details that we know and some of the questions that we might have. So again, the idea is it caps the amount of money that you could borrow, but here's the good news from the information that we found out recently from OSFI. Now, this is care of our good friend Rob McLister, who's provided a detailed summary to understand some of the questions that we already had. The first question was, is this as scary as we think it's going to be? Is it going to reduce qualification as much as it looks like it could be? And the answer to that question is no. It looks like it is possible that the LTI qualification might not be as impactful as we originally thought. So it actually only considers the loan amount for the specific property that you're buying as well. Now, what this actually means is this was a big question for investors was, okay, if I go to qualify for this new mortgage, does the fact that I currently carry multiple mortgage applications or multiple mortgages and debts in my existing name right now, is that going to be impacted by my ability to purchase this property? And the answer from OSFI is no. In fact, they will not look at your other properties according to this calculation. They're simply looking at the property that you're purchasing and the mortgage that you're actually getting today. The next key point is that according to OSFI, income calculations will remain the same and lenders can still consider the income that might be or might not be on your tax return if you're self-employed. So first of all, if you're self-employed and you're wondering how is this going to impact my ability to qualify, according to OSFI so far, at least the existing feedback is that it's not intended to change the way that income calculations are created, which means if you claim a certain amount or don't claim a certain amount, banks will still look at the income that's claimed on the application. So good news for self-employed borrowers potentially is that you don't necessarily have to change up anything from that perspective. The next point is that, as we discussed before, when it comes to investors, I know I've circled back here, but rental income from investment properties will still continue to be considered as it was previously, and it's a lender by lender question as far as how much they will lose. So what is the potential impact on the housing market, and what are some of the other big questions? I mean, first and foremost, based on this information and the fact that so far OSFI is suggesting that this is more of a portfolio requirement as opposed to a per person requirement, still yet to be confirmed. So that's still a little bit foggy right now. We don't expect like a full market meltdown like some people were suggesting, and there was some concern in the marketplace originally speaking. What it could do is, depending on how it's implemented, if it is implemented in some of the ways that we think it could be, this could be a slowdown to the marketplace. It could reduce borrowing power, but you have to keep in mind a few things. When rates are elevated that they are right now, the average Canadian consumer is borrowing less than 4.5x their income today. However, when rates were low in the 3s or the 3.5, or even if they hit 4%, then the typical multiplier today would be closer to 5%. And so we would see a reduction of mortgage qualification at that time. Ultimately, we do believe that because there are federally regulated lenders, there will be options for consumers. However, it will probably take some time for the market to adapt. And it's another reason that a borrower will want to be working with a mortgage broker who can access different lending institutions instead of working with just one lender, because you're going to be severely limited. My belief is that the future of lending will continue to evolve, and it will be more and more and more specialized. And this is just another reason to suggest that will be the case. Because remember, this rule is specifically for federally regulated institutions, of which they're not all lenders in the country are federally regulated. Now, some big questions really at the end of the day. Will lenders actually stick with this limit? Will they adapt and change? Will OSFI make another adjustment? At the end of the day, we will find out and we'll keep you up to date as things move forward. But of course, this is just an update to what's going on, what you need to know. And if you found this content helpful, please go ahead and hit that like button and subscribe button, and we'll see you on the next one.